ask you that.
I'm all in equities. So that's the only game I want to play. And I think this is one of the best times in recent history. Let us step back and look at this. We have material disruption, technology disruption taking place globally and in India. Such disruptions cause value migration. We also have selective dislocation, where, as I said earlier, median valuations have corrected. And we have a set of new genre of companies and entrepreneurs which are getting listed, which are providing access to public market investors like us, to companies which have a new version of business models, new go-to-market strategies. This has happened after quite a long time. Add to that, whatever disruptions we are seeing globally, either with regard to geopolitics or economics, our government has been responding to that. Let us connect the dots. We will have a larger fiscal deficit this year, as the government has said. To my mind, that is a fiscal stimulus to the economy. Our rupee has depreciated. To my mind, that is an external stimulus to the economy. It makes us more competitive. With this FCNRB structure, who knows if we get $50, $100 billion coming in. To my mind, that is an indirect monetary stimulus to the economy. And the tax break that we gave to data centers for 25 years, that is a policy stimulus. If I add the fiscal stimulus, the monetary stimulus, the external stimulus, and the policy stimulus, all the ducks are in line. I think good times are ahead of us.
Sridhar, from your economic hat perspective or perch, what Utpal was saying, it's such a dynamic world. There is so much that's changing. There's so much that's happening in the world that you've got to adapt to.
Yeah.
There's so much happening in other asset classes that you've got to adapt to. There's so much in economics that you've got to adapt to. And then, of course, geopolitics, politics, and all of it. What is your frame of mind as an investor today?
So broadly, my view is you should have a good asset allocation. So my view is you should have, say, 10-15% in international equity. I've been investing since 2015 in international equities. About 10-15% in gold, which is one of my favorite asset classes apart from equities. And of course, the rest in equity. So that's a broad framework. When you have an asset class which is reasonably diversified, like say last year gold did very well, equities didn't do, but then it averages. Your average still looks reasonably good. So the benefits of asset allocation helps over a long period of time. So I would say broadly that by diversifying your asset classes, helps you to mitigate risks of any particular geography or any particular asset class.
Hiren, is all this dynamism and all this volatility purely in terms of data points in the price now? What you see on the ticker, has the market digested all the repercussions that we're going to see in the next 6 months? Or is there still room for more volatility, you think?
No, I think, in today's day and time, news gets discounted very quickly. But there is a difference between discounting news and trying to discount the reality, right? And sometimes there is a gap between the two because, as I said, the narrative builds up and the narrative may be right or it may be wrong. Only with time and in hindsight you get to know that. So I think as investors or as asset managers, we are constantly trying to figure out if there is a trade-off between that narrative and reality. Or also sometimes people give up because within a long-term structural cycle, there may be short cycles of underperformance. Let me give you an example, right? In mid-2024, when the expectation was that this government will get a complete majority, and they did not, right? So while they had to take support of their NDA partners, I think suddenly the theme on defense, on capex, just gave away because people immediately reacted to that news to say that अब तो capex नहीं होगा, right? ये हो गया. अब, you know, ये लाडली बहन, ये वना. So everybody, if you remember, went and bought consumer stocks, right? And finally what happened? So maybe these sectors or companies underperform for a year, but the reality caught on and the trend reasserted itself. So I think today there is always the, we want to discount every news very quickly and make sense of it very quickly. I don't think long-term investment works that way. You have to sometimes step back, think, and really understand whether this is finally what I have seen over the years in the markets is that finally numbers speak for itself, right? Narratives can come and go, news can be good and bad, but it's finally the narrative that matters. So for example, something which is very recent, right? Now Trump may flip and flop every morning and evening, but whether we are coming closer to a resolution of the war or not, the oil price will tell you the story, because that's the reality. Because all the wisdom, all the risk taking will get reflected in that one variable, and that is more important than somebody saying yes or no early in the morning. So I think I would say that we have to step back and look at what the long-term structural trend is, where the money is going to be made, and then stick to it. Have the ability to stick to that. And that's where the money is going to be made. Not discounting the news every day, every week, every month. Doesn't happen. You can do a lot of activity, but you don't make money.
So Hiren, what is the narrative? What is the reality? And what is the structural story in the long term?
Well, I think there are more than a reality. I would say that there are a few trends that are very clear now post-COVID, right? I think that one, in my view, we are in a global capex super cycle. And whether it is because of disruption, geopolitics, wars, oil shocks, I think it is very, very clear that today every country has realized that when it comes to certain foundational capabilities, defense is a foundational capability. Having access to semiconductor technology is a foundational capability, right? Having energy security is a foundational capability. I think every country in its own, every large country which has an ambition to become big is today trying to figure out how they can be self-sufficient or hedge themselves. How do you hedge your supply chains? And I think that is driving a large global capex cycle. And that is a reality. Now, how you take advantage of that is then comes down to the more micro thing about whether you buy a pipeline company or you buy a semiconductor company or you buy, a defense company and so on and so forth. But I think this trend is unlikely to go away. So even if the war stops tomorrow and oil prices were to come down, as a country, we can't stop investing in electrification. We cannot stop in trying to do capex to get our energy security, right? Because it's, you've been hurt and therefore you have to address it at a very fundamental level. So I think that is not going to change in my view. And this has been happening. And alongside all of this, we are seeing this whole huge AI disruption, right? And there will be several layers to this. We are also benefiting. I mean, you mentioned about what is the narrative. Somebody also asked me, I was at one event, your sister company event, right? And the big narrative today in India is that India has no AI play, right? Agar aapko AI khelna hai, you have to go to US.
Anti-AI trade.
Huh?
Anti-AI trade.
We are an anti-AI
Yeah.
play. So I'll tell you that, currently in AI, most of the spending is happening at the infrastructure level. So people are setting up data centers, blah, blah, blah. And I gave this data. I told my team to build a custom India AI index, right? So these are all physical stuff like power equipment, cooling equipment, cables, everything that goes into building a data center. A equal weighted 12 stock India AI index in 3 years in dollar terms has delivered a 52% compounding return versus Mac 7 plus Nvidia, which has delivered a 24% compounded return, right? So the point is, if you look hard enough, if you are creative, there is always a way to play a trend. Or you could sit and say, India में कोई AI नहीं है, मुझे कोरिया जाना है, मुझे अमेरिका जाना है, right? I mean, there's always a choice. So I think narratives are narratives, and the more the narratives are there, the more I think there is a opportunity to make money. Because you can find an anti-narrative, you can find the reality which does not, the narrative does not represent. And that's where the profit-making opportunity is.
Utpal, much like, what Hiren was just saying, foundational opportunities, structural opportunities, that's been your style as well, right? And we've talked about it over the years. You did talk about data centers, but beyond that, what would you think has to be part of your core portfolio right now? Themes.
So, to build on top of what Hiren said, if we go with the hypothesis that there is a global capex super cycle and India is participating in that, whether along with the global cycle or a little behind the global cycle. If you also accept the fact that there is a deglobalization trend where supply chains are being reconfigured to friendshoring or nearshoring, then between these two things, we will have, and I'm convinced that we will have in India, a capex cycle that we've not had since many years, since more than a decade. In addition to this capex cycle, a necessary corollary will also be a credit expansion cycle. So when you have a capex super cycle along with a credit super cycle, you will have good times ahead of you, as I shared earlier.
Sridhar, a capex super cycle which Utpal spoke about and Hiren also spoke about, is that enough to drive growth and take care of the shocks which are coming from geopolitics or external shocks which are coming in?
No, I think from a macro standpoint, the government and Reserve Bank, whatever they have done, they've been quite phenomenal. But I think the challenge is that India is an importer of crude. And if the war had not happened, our own view was that FY27 would have been a great year because earnings were coming back. Only because of what is happening because of the war and because of the implications of that on inflation, and many companies will not be able to pass on the benefits, pass on the increased cost. We are seeing margins, we expect margin compression happening for the current year. And that is pushing down the earnings growth for India in general. But if you ask me that, is capex enough? No, consumption is the other big engine that our economy rests on. Exports is the other one. IT services facing its own set of challenges, but What we are seeing is that some part of it is being offset by the GCC revenues that we are seeing. So there is, offsets at various places. But I would say it's a multiple, India is just not just one theme, right? As Utpal was mentioning, there are multiple themes. You could find multiple sectors in India. So on a bottom-up basis, you'll always find themes to invest.
Hiren, 2025 we saw two policy decisions, one on tax front, one on indirect tax front, which was helping in consumption. This year, as Utpal mentioned, there are external policy tailwind which is coming in terms of rupee, then you have policy tailwind which is there. But even then, why isn't the market convinced about the growth narrative which is there? And why is the market worried about it?
Are you talking about economic growth or
economic and corporate growth?
Well, I think if you look at what happened in 2022 when the Russia-Ukraine war broke out, right? I think we had a similar geopolitical shock. We had an energy shock. We had a supply chain shock back then. And I think for a brief period, for about 2 quarters, we had a significant earnings slowdown, right? So I think that playbook is still very fresh in the minds of the investors. I think obviously the Q4 earnings were better than what most people expected, but I think somewhere at the back of the mind, the market believes that Q1 numbers will not be that great, right? And even I don't have a crystal ball, but I think it is fair to say that there will be some compression in margins. But I also believe that, and from what Utpal Bhai said, I think people forget that, a depreciation of the currency and a little bit of pickup in inflation is actually very good for corporate profitability. I think one of the problems of last financial year was that our nominal GDP was growing at single digits, high single digits, because inflation was very, very low. But I think a little bit of inflation is good. My sense is that this time, learning from the 2022 cycle, I think corporates are going to become much more smarter in terms of passing on the higher costs to the end consumer. Now, obviously, it will differ from sector to sector because it will depend on the competitive dynamics in each sector. But in general, my feeling is that this time we will not see the level of margin compression that we saw in 2022. I think people are far more prepared, and I think the entire ecosystem is prepared to absorb higher prices. If you see, one of the things, the narrative was that because of tariffs, US inflation will spike. But US inflation did not spike. It only spiked now because of the energy shock, right? The latest readings that came for US inflation was largely driven by energy prices. So my point is that because of an old playbook and correlations that are still fresh in the minds of investors, people feel कि earnings में बहुत बड़ा impact आएगा. I think the jury is yet out. My feeling is that we will be okay with earnings, and once the market is convinced about that, I think they will also respond.
I know Sridhar is a contrarian on inflation target, and he thinks that RBI is estimating too much of inflation, but it's not going to be, right?
Yeah, so my own view is that RBI's inflation target of 5.1, especially the Q3 of 5.9 is very high. What I think RBI is missing is that some part of the inflation last year also came because of gold and silver. Almost 60 basis points came because of gold and silver. This year, that is going to be more on the positive side. Plus, I'm not in the El Nino camp. I think this is a hoax we've seen many years. I've traveled to 5 states in the last 45 days. We've had pre-monsoon. I faced pre-monsoon showers in all the 5 states. And that impacts the food and vegetable prices to a large extent. So I'm not in the camp. I think RBI was wrong even last year. Their credibility on inflation projection hasn't been very good. I think they may end up being wrong even this year. And so I'm not in the camp that there needs to be a rate hike at all, because to a large extent the rate hike chatter was more because of the currency related issues. And that I think they have taken care of very well. And if inflation is going to be transient and it is closer to 4.5, there's no need for a rate hike. So that's my broad view on inflation and rate and how I see this.
Utpal, multiple tailwinds, you spoke about it, you articulated very well from the policy front, from the fiscal front, from the monetary front. We already have a developed economy like a EU already doing a hike. Do you think that we will go into that phase in India as well? Will there be a rate tightening cycle which will happen to control inflation? And if you go by what Sridhar has to say, it's not, inflation is not a worry.
I think there are strategic choices that are being made and articulated by both the government and RBI. The intent seems to be that they don't want to give a growth shock. We may be having an inflation shock. If you combine an inflation shock and a growth shock, you will trigger the economy going into a negative spiral. Therefore, I don't believe that RBI is going to hike rates. I think RBI signaled that its priority is to protect the domestic growth, and which is why it has let the currency depreciate. And it is now dealing with the currency situation without using the blunt tool of rate hikes.
Interesting. Hiren, you briefly mentioned that you created an index for India AI, 12 stocks. People would like to know which are the 12 stocks in it.
The constituents.
Which are the 12 stocks? Well, I mean, they are essentially all beneficiaries of the AI capex that is
That you
happening,
told us,
right? I mean,
the question was on the names. You told us it was an AI stack. We know they're all beneficiaries.
No, I think they are fairly large cap stocks. So, companies like Hitachi, GE, ABB, Siemens Energy, Apar, Polycab, Blue Star. I mean, all these companies, Cummins, I mean, these companies all supply into the AI. Again, my idea was to demonstrate that there was this sense of complete helplessness which had gripped people. My point is that if you think hard enough, and if this is such a big global capex theme, there are still linkages around the world, right? And there is a way to profit from it. I think if you look at the whole post-COVID shift from bank deposits to financial assets and, equity markets and SIP, I mean, that was a big trend, right? And funnily enough, for a lot of people who love private banks, I would say that if over the last 3 years, instead of investing in HDFC Bank, if you invested in HDFC AMC, you would have made a 35% CAGR returns over 3 years versus minus 1.5% for HDFC Bank, right? So my point is that there is always a way to play and benefit from a trend if you think hard enough and creatively enough, right? So I think that we have our own version of AI which beat Max 7 plus NVIDIA put together, by the way.
A huge round of applause for that. The India AI stack that Hiren created with his team gave better returns than Mag 7.
Yeah. Sridhar, look at what's happening in the IT services. I know a lot have been written about, and some people have also written off the IT services. Do you think there is money, smart money, which may go there, capital may be deployed there because they are traditional good businesses and they're agile to take care of the entire transition?
So I have to say that within our firm itself, we have differing views on this. So I am on the bearish camp. I've been bearish on the Indian IT sector for the last 2 years, and I'm not suggesting that these companies will close down or shut down or anything of that sort. It is just that they're getting into a low growth phase, and the starting point itself was very poor because they were trading at, say, 30 times the multiple. And on top of that, you have this whole AI related bogey which has come in. My view is that Indian IT sector, especially at the bottom of the pyramid, in fact, Infosys in their balance sheet has given out some data about how the number of people below the 30 years of age has come down drastically. That's exactly what we were saying, that coding, which is a very easy task for AI to do, that is the first one to get disrupted. But it doesn't mean that these companies are going to die. It's just that their terminal value goes down. As a result, the valuation multiple that you give comes down. And the classic example I always give is the media sector. So you look at the media sector, say 7-8 years back, they were trading at 20-25 PE. And then you get all the OTT invasion that has happened. What has happened to these stocks is that they are now in single-digit PE. So the point I'm making is that they may continue to get derated. I don't completely agree with the previous panel where they felt that this is an opportunity, but different people have different views. My view is that the sector will continue to get derated and they will have low growth. Doesn't mean that, and some companies will disrupt themselves. So the point is that if you are able to disrupt yourself and change the way you're doing business, maybe they will emerge as winners. I'm not in a position to identify the winner right now, so my view is to stay away. But there are others in my office who think that this is a great opportunity because the dividend yields itself are very attractive.
You know, Utpal, all through what has happened in the last year and a half, and I was telling my colleagues also this, I was like, I wish Rakesh Jhunjhunwala was there because he would come out on TV and he would tell you as is. Even during the March lows, he would come out and call a spade a spade. You've been through so many cycles with him. If he were here in this room today, what would he be saying about where India stands and where India is in this global equity multi-asset race that we're in?
He would say, the mother of all bull markets is ahead of us. He would also say that your patience may be tested, but your conviction will be rewarded. This is a time, I think, to build on your conviction. And always in the past, we've seen that conviction is what works out for you.
So where is it that you have that maximum conviction in this market right now?
I would say financials would be the space where I would have maximum conviction. On the capex cycle end, as I talked about the capex cycle and the credit cycle, on the capex cycle end, the valuations are already very high. On the credit cycle side, I think valuations are very low. So we are in deep value territory, both for banks as well as for ID services. But I think the resurgence in the lending side will be far better. The impact on the monetary side will be far better. We've been in a situation where our nominal credit growth has been 12% for the last 2-3 years. We are just coming out of that. I think I can see a sustained credit cycle growth of between 15 and 18% for the next 3 years. At least. That makes the financials an attractive space for me.
That also means if credit growth is going to come up to 15 to 18%, then your corporate spending also, which is going to go up in that sense. And so what you spoke about the capex super cycle and the growth, it's going to come back in earnings despite all challenges, Hiren?
Yeah, I think when I spoke to a couple of banks, they said that there is no better time than lending to corporates at this point in time, right? So to some extent, I agree that we are going to see a very good credit cycle over the medium term. However, I believe that the big defining story of this decade is going to be manufacturing for India. And I think all engines will grow in India, whether it is, banks, NBFCs, manufacturing. But I think the leadership in this cycle, in my view, will belong to manufacturing.
Well, gentlemen, we are at the end of the session. Thank you very much for joining us today and giving your insights on how capital is going to flow into various sectors and the tailwinds we have. Thank you very much.